Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Okay, welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening to the show each and every week. We come to you through radio as well as through podcasts. We're also on YouTube. Our podcasts are seen by the Big Eight. And Daryl, do you have a list of those Big Eight there?
You know, I did when you started.
I know it's Apple Music Play. I know it's Google Music Play, rather.
Yep, radio.com, speaker.
Yeah, a number of others. The Big Eight, they call them. We are really ranked well because there are very few mortgage shows out there. I know there are more now than there were, and they're certainly showing up on LinkedIn and Facebook and a number of other. Hey, Daryl, I have one question for you. TikTok. Yes, what do you know about TikTok? I had a LinkedIn person tell me that TikTok is really the way by which you can reach an audience that wouldn't necessarily want to hear your message or ever call you, but that the information itself is something that should be out in that demo. What do you think about that?
My understanding at this point, TikTok has looked to more of a dating site than anything else, so it's like for singles.
You know, it is. I was on it. I actually signed up for it. I was like, what am I doing here? It's almost like, I can't describe it. What the incongruity of it is. I'm standing in the middle of a room full of very attractive young people, and I'm Santa Claus's dad. Okay, that's the way I feel. However, this person, who I highly respect for her online presence on LinkedIn, and by the way, the Mortgage Minute, which we also do on LinkedIn and Facebook each and every day, is a brief synopsis of what's going on in that moment. During COVID, it's been really difficult to try to stay on top of everything all the time for anybody who's looking for a mortgage. So we try to help out by doing that. I know the CEO over at PRMG is doing it. I know the guy at Nations is doing it. And these are both very, very big, respectable, good lenders, good banks, and good people. But trying to give the information out to a younger demographic in TikTok. So I'm playing around a little bit with it. I'm thinking of coming up with a specific character which would be funny, but also to deliver the message, which is, financial education. So I have this friend, actually, and he has a character that he's been playing for 40 years. I met him many, many years ago, and it's Mrs. Goldfarb or something like that. It's a guy, he puts on a wig and weird glasses and then talks as if he's from New York City in a very, funny way. So I was thinking of having a character like that, which would be funny, something you'd look at. And by the way, all of these younger demographic websites, it's all about the funny, right? If it's not funny, nobody's looking at it. And I don't care how beautiful, how chic, how everything else. If it's funny, people will watch it. And so like cat videos, if it's funny, people again will watch it. So that's where we are. That's where the show is, and that's where we are today. Let's see, the rates today, 2.92% for 30-year fixed. The rates have been sideways really for about a week. They're up and down basis point here, 2 or 3 basis points there. But for the most part, we've seen these rates before, and we will see them again. It looks like we're going to see long-term rates really stay where they are just because we don't really have a solution as to what else is going to happen. We know the Fed is buying mortgage-backed securities. We know the Treasury is buying treasuries. What I've been talking about is the rates and how the rates have been really going sideways for much of 2 to 3 weeks, and what the Fed and the Treasury are doing, trying to balance out the economy. I know that there's talk of another stimulus in order to keep people in their homes, keep people renting, keep people paying whatever bills they need to pay. That's paramount to the real estate business. I mean, if we lose customers, we are going to see some very, very difficult times in the real estate sector. But currently what we have is a real estate market which is doing as good as it has been doing, and even better in some. In Q2 this year, the highest homeowner rate in 12 years. That's a big deal, right? I mean, we're in the worst pandemic we've had in 100 years, right? And many people, and I had a conversation today with one of my real estate agents asking him, okay, how are you doing showings? Well, I mean, you're a seller's agent. How do you let people in the house? What do you do afterwards? How are the sellers taking people coming in and out of their house? He said it's a hassle. You have to clean every time they're in and out. You schedule appointments instead of every 15 minutes, every hour to an hour and a half. You give yourself time to go in, do all the doorknobs, anything that a potential buyer might touch. You have to set things up so that, gloves and footwear over the footwear. Yeah, it's a long and difficult process for real estate agents to continue to do this over and over and over again. But that is what's happening in the real estate market in terms of showings. And so as a result, we have 67.9% of people in the US owning their own home. That's a big number. When you think about it, I mean, we've had higher numbers, but not really that many. I mean, even before 2008, let's say in 2004, the number was 69%. So yes, 4% is 4%, and we're talking millions of people, but at the same time, this is a very big number. We have less people in forbearance today than we did at the start of the coronavirus. The first 2 or 3 weeks, we had 4.5, 5 million people in forbearance. We are now hovering just above 4 million people in forbearance, and that's a good thing. It means people are coming out of forbearance and being able to pay their mortgages for whatever reason. I don't know whether it's they've gone back to work or whether they are working. There is a lot of cheating going on out there, and I'm not saying I'm one to say, hey, you shouldn't take free money when it's in front of you. I'm not saying that. But what I do think is that when we get to a closer deadline as to the end of July, which is coming up in a couple, 3 days, or had just come up, excuse me, what we've seen is the ability of people to continue to pay rent is based on unemployment checks. It's based on the ability to pick up an odd job or have unreported income. So we will really get to see what that's like. The over 65% in the over 65 crowd, the percentage of home ownership with this group is 81%. That's a big number. Now, over 65, granted, that's a very, very large crowd, and a lot of these people are, have their homes paid off. Trillions of dollars worth of equity are in this group's homes. How do you tap into that? How do you be able to use that if you're 80, if you're 65 years old and you want to continue to work or do that? I would check out the reverse product. It's a very good product. We've had a couple of specials on that, and today on the show we have had, or will have rather, a great guest who talks about reverse mortgages and how best to use those. Under 35 years old, 40%. So this is the millennial crowd, right? This is the group, the largest potential homeowner group in US history is in this millennial group. A lot of people in this group, but less than 40% of them own their own home. So they're slow to get to the market. This is the future of real estate. How do we reach these people, and how do we get to be able to say, hey, you need to buy a house, not necessarily because you need a place to live, but because long-term, owning your house is the best way to increase your wealth, and it's the best nest egg for your retirement. A lot of people don't save. They don't put away money into the 401k. They don't really have any plan for the future. But if you own your own home, that is the plan for the future, because eventually you'll pay that mortgage off, especially if you're 35 years old, get a 30-year mortgage, you're 65, boom, there's your retirement, 100% equity in your home, and you're ready to retire right then. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and thanks very much each and every week. We are on 8 major podcasts, and our podcasting ability stretches from Apple to Google to iHeart Music to Spreaker. We've had some issues on one of our feeds from KCAA, our affiliate down in the Inland Empire, saying that a lot of the podcasting available out there is changing the way they're either doing it or the way they're receiving the information or the way the information gets to you. Well, don't fret and don't fear. What we do here on the Mortgage Voice is unique. It's being uninterrupted, and we're delivering it to you each and every week. We are on three different states, 5, 6 different stations, and from Albuquerque to Las Vegas, up in the Inland Empire, and certainly up in Lake Tahoe. We bring this show to you. It's also on YouTube. If you go to YouTube, Jeff Barton, the Mortgage Voice, you'll see this as well as many other shows, whether it's the Las Vegas Real Estate Show or our new special, which is the Reverse Mortgage Show. And that's, of course, through the Mortgage Voice. I'm really happy to have the star of that particular show on with us now to talk a little bit about reverse mortgages, Nina Penny. Nina, how are you?
I'm great. Thanks. How are you?
I'm very good. Thank you very much.
Staying safe?
Yes, I am. I'm staying very safe in my hovel in front of these camera lights. So yes, it's frying all the virus or whatever it is that's in front of me out. And hope you're doing the same.
Sure am. Thanks.
Okay, let's get right to the heart of the matter. You are the reverse mortgage specialist. I just want you to briefly describe what you bring to the table for people who are looking for financial solutions in the older part of their life.
Well, I think anybody that's looking at maybe creating a new bucket or some other way of tapping into some of the equity that they have in their home, and still being able to enjoy the home and not having to make a payment, a reverse mortgage is a great option. It's also used for a lot of different things other than, buying a new home with a reverse mortgage. You can also set up a line of credit. You can use a reverse mortgage, kind of like an annuity if you want. So it's a very versatile product.
Okay, I'm going to ask you some questions. We receive questions from time to time, and today was just one of them from the audience who writes in because they want to know about reverse mortgages. There's been a lot of connotations and a lot of innuendo over the years about how dangerous they are and how the bank will take your property and how, this isn't for you and don't get suckered in by the fast-talking real estate broker. How do you answer these particular issues?
It's a battle to overcome all of it. There's a lot of misconceptions out there, but a lot of the misconceptions actually come from the 60s, 70s, and the early part of the 80s, believe it or not. The reverse mortgage back in those years were all those things. They were shared equity. If you were upside down, they went after the heirs to get the balance of what was owed. Those things are true. That's how that product was. But Ronald Reagan actually took the product, handed over to HUD, and suggested they come up with something to make that product better. And put some safeguards to protect seniors. And so what they did was they actually converted this product into an FHA loan that you're not obligated to make payments on. You can if you want, but you're not obligated to do so.
Okay, another quick question from the audience. How old do you have to be, and what are some of the other requirements to get a reverse mortgage?
So one requirement, the age requirement, is that there has to be at least one borrower who is 62 or older. So, Jeff, if you and I were married, of course, I'm not 60 yet, but we could get a reverse mortgage because you are of age, and the numbers would be based off my age because I am younger. We want to make sure that I'm protected. So that is one of the safeguards. Second of all, that there has to be equity in the home. As a rule of thumb, I yet like to think that on a reverse mortgage, you'll get a minimum of 50% of the appraised value. Okay. That if you have a mortgage on the home, that mortgage will be paid off first. So that automatically, if you have a mortgage payment now, you will eliminate that monthly debt.
Okay, a couple ways you can use this product. Another question from the audience. If you have a reverse mortgage and you're using it like a line of credit, do you ever have to pay that money back?
No, you're not obligated to make any payments on it. You can if you want. However, let's say you have a line of credit and you use $10,000 on a new air conditioner, right?
Right.
Then maybe you take, if you want, you can pay payments towards it, but you don't have to.
Right.
Not until you sell your home or you pass does the loan become due. at that time the amount of money that you have borrowed and the interest that that money that you borrowed has accrued is due.
Okay. I'm sorry, I interrupted you. Sorry. Were you finished?
Yeah, I think I was.
Okay, okay, very good. All right, say in that scenario where we're married, I'm older, you're younger. I die, the mortgage is in my name. What happens to you?
No, I am safe to live there. I can live there until I die.
I see. Now, is the property still under the control of the heirs until, how long does it take before they either have to pay off the loan or sell the property?
So let's say you've passed and I'm still living, right? Let's say by chance now that you're gone, I want to move to Hawaii.
Okay.
So I sell the house. At that time, the loan is due. I have to pay off the loan, just like any standard loan. If I pass, just like any other standard loan, that loan is due. A reverse mortgage is a little different, though. It does give the heirs an opportunity to either sell the home or refinance it.
I see.
So they usually have 6 months. If they need more time, they can get more time. But once again, being in contact with the lender is very important. But unlike a traditional loan, that mortgage is due, and you don't get a spare month or 3 months after someone passes when they have a mortgage on the home. But the reverse mortgage does work a little bit differently like that.
Okay, we're coming to the end of the segment here. Do you mind if I ask you if people wanted to get in touch with you, how are they going to do that?
Sure, they can call me. My number is 480-635-2410. You can text me that number as well. Or you can email me at nhpenny@msn.com.
Okay, very good. I know I wanted to touch on one last thing. I've got about a minute left. The reverse purchase. Tell us a little about that.
A reverse purchase allows you to obtain maybe the home of your dreams or get a home of a little more value. What happens is, let's say we go find a house and it's $300,000, and we can make a one-time contribution to that home of $150,000, approximately 50%, and the reverse mortgage loan would be the other $150,000.
I see.
And that $150,000 that the bank is giving us a loan for will accrue interest until the time that we sell the home or we pass.
I see. So, and that product sounds like a great product if someone is moving from a state where they're taking money out of a property they're selling and then moving to a state whereby they can use that equity both to purchase a home and also to, put in the bank.
Absolutely. I mean, why spend all your liquid if you don't have to?
Absolutely.
And have all the same benefits?
Hey, Nina, thank you very much for coming on the show. I really appreciate it. Love having you on all the time. I want to do it again soon. Thanks again.
Thanks, Jeff. Bye-bye. Stay safe.
Thank you very much. That's Nina Penny from Malibu Funding. She's a reverse mortgage specialist. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks very much for tuning in each and every week. We bring information to you that you can get other places, but you're going to have to surf around and see what's out there. We're on 5 radio stations in 3 different states, from Albuquerque, New Mexico, all the way up to Las Vegas, Nevada, certainly in the Inland Empire, and also in Lake Tahoe, California, and Nevada. Thanks again for showing up and listening to what we have to say. We're on YouTube, if you go to Jeff Barton, the Mortgage Voice, and we're on 8 different podcasts, the big 8, and it's again bringing you information that you're going to have to need. It changes each and every day. This COVID thing is really driving markets crazy. One of the good things is the rates are down. One of the bad things is lack of programs. So I brought a guy on today who's probably and possibly got the answer to both of those. It's Aaron Golden from A&D Mortgage. Aaron, how are you?
I'm doing well, sir. How are you doing today?
You know what? I'm okay. Thank you very much. It's been a busy, busy time in our profession, as you know.
Right. It definitely has.
So tell me, what is happening at A&D? You heard a little bit of the intro. So what are some of the solutions that maybe you guys offer that other people don't?
Well, right now, what I'm really excited to mention here is, as an account executive, my role is to get the word out, speak with different brokers out there, loan officers, just to let them know what options that they do have. And that's one reason why we're on this call. Right now I'm talking to brokers and LOs every single day, and they're looking for a jumbo product right now, especially in California and states that are dealing with the trials of this pandemic, and they're looking for a loan that can really put a borrower who has the money, who has the credit score, and needs the lending that they truly deserve. And this is the jumbo product that I'm really excited to announce. In fact, many brokers are signing up just with me just because of this jumbo product that we have, which is offering a 30-year fixed option. And as you do know, a 30-year fixed option gets any borrower excited. So.
Yeah, no, I agree with you. All right, let's get down to some nuts and bolts here. Okay, what is the jumbo? Does it change per area? How much money can you lend up to? What are some of the requirements to do that? Rate, all the 911 on this.
Sure.
Thanks.
Right. So a jumbo loan is any loan that exceeds conforming limits. So depending where the borrower is, they may need a jumbo loan. So
Right.
the highlights here is that, if you have a 700 FICO score and at least 20% down, I'll go to a $2 million loan amount size, okay, and a
Yep.
30-year fix. We'll likely get that priced in the mid threes, low threes at par.
Awesome.
So right there alone, if you have 20% down and a 700 FICO score, will put you into a product that would definitely help you, whether we're doing a rate in term or purchase. That's something that I'm excited to offer here at A&D Mortgage.
Yeah, no, it's good. And do you do cash out as well? What are some of the parameters
Yes.
on that if you do them?
Yes, we do cash out on this jumbo product. Typically, we're going to be at a max loan to value of 55%
Okay.
at that point. We're probably looking for a 720 score at that point to do a cash out. Actually, it's going to be a 740. If we're going to do a cash out there, and max cash in hand we're going to give out is $500,000 as well.
Okay.
So that's definitely an incentive for borrowers to refi, get some cash out that they need, because right now it's the refi boom.
Yeah.
Definitely something that we're proud to offer.
Okay, so jumbo product is huge, right? In Southern California, especially, certainly up in Las Vegas area and down in Albuquerque where the show's being heard, maybe not so much, but in Southern California, absolutely. What do you suggest to people if they're looking for a particular answer? They want to buy a house, it's a purchase, you're saying 20% down, 740 credit score, and they also want to be able to purchase a second home. Do you do more than one loan for one borrower? Can you do a jumbo more than once for one for a particular borrower? Maybe a different state, vacation home in Lake Havasu or something?
Correct. If you want to buy a second home, we'll definitely put you on the same product. We'll get you a low rate in the threes as well. If this is an investment property, we can definitely do the same thing. Typically when it comes to a second home or investment, the loan value is going to drop a little bit. So you won't get a second home. Well, actually, we are allowing a second home at an ADL LTV, but if it's an investment property, you're going to have to put at least 30% down to get a jumbo loan for us to lend to you at that point. So it's a great option to have here, not only just for a single family home that you're trying to buy for yourself, but if you're looking to buy a couple rental properties and second home, that's something that we're going to allow here at A&D Mortgage. Excellent.
So at A&D, tell us a little bit about A&D. How long you guys been around? How many states you service in?
Right. So I'm glad you asked that question. So right now we're licensed in about 20, 25 states. We're pending approval in about 7 more states. We can lend all the way from California to New York right now.
Wow.
We'll be getting approved in Nevada, Washington, Oregon. We're actually, we're just waiting for the approval at that point, but we've already did what we can. So we will be getting approved in those states. A&D Mortgage, we've been in the wholesale business for the last 6 years. We've primarily focused on non-qualified mortgages. That was our bread and butter. But recently, our CEO, Max, he went ahead and wanted to really get involved in agency loans, and so much that we're on the top of Loan Sifter, Optima Blue, or Marksman. If you're a loan officer out there, you're looking to compare rates, please add us on Loan Sifter. You're going to see we're near the top on rates out there, and so you can definitely give us a look there. And I mean, I'm pricing loans right now in the mid twos at par on a 30-year fix for conforming loans, and I'm proud to be a part of a company that has shifted their focus to really, give benefits out there to borrowers that are looking to not just, go to the major players out there like United Wholesale, Quicken Loans, but, that they just want the rate that they truly feel they deserve. And we're excited to offer that option here at A&D Mortgage.
Now, you mentioned that conforming type loans, Fannie Mae, Freddie Mac loans, you guys do that as well?
Yes, we also do FHA. We're not going to do any VA loans right now. So you're just looking at your Fannie, Freddie, FHA loans, and we're actually a direct Fannie Mae lender. So I forgot to mention that. So we're a direct Fannie Mae lender, and so this is the type of loans that we're doing. We will be a direct Ginnie Mae lender in no time, actually. So we actually we're waiting to receive our credentials to do that. So.
Well, when you talk about that, I think some of the people in the audience may not know what that means. Just as a brief oversight, maybe you can clarify if I'm absolutely wrong or right. Being direct to either Fannie, Freddie, or Ginnie allows your pricing to be better. Isn't that the bottom line to it? Oh,
that's the bottom line. That's the bottom line. So, we're a direct Fannie Mae lender, and that allows us to give the best rates out there. There's some lenders out there that you can only broker up to, and then they have to give a higher rate because they're not a direct Fannie Mae lender. That's one of the benefits of being one, so we can offer such incentives on rates. Not only that, we're able to offer great lender credit as well. I mean, I'm pricing loans right now in the mid twos. We're actually giving a lender credit back to the borrower to offset some of their closing costs too. So look at a low rate, and we'll give lender credit. Sometimes if you go to another lender, if you want a low rate in the twos, it ends up costing you a discount point to the lender in order to get such a rate that you're desiring. So that's the benefit of being a direct Fannie Mae lender. Where not only that we'll offer great rates, we'll also give you a lender credit to help with your closing costs. And that's one of the beneficial things of going to a direct Fannie Mae lender.
Hey, listen, I know you represent a lot of different brokers, a lot of different lenders who use your company. Would you mind shouting out a telephone number to get in touch with you so that you can then provide the borrower with a terrific mortgage broker for these products?
Yes, my direct line, since I'm the account executive, and mostly I'll be working with brokers and loan officers. So, the number to call me would be 213-282-4300. I don't mind putting my cell phone out there as well. But since I'm wholesale, I can only work with brokers and loan officers. I won't get to work with the borrower directly, but if a borrower did call, I would send them over to Malibu Funding to start the loan process that way.
Well, that's very kind, and I appreciate that. Malibu Funding is the sponsor for the show and the company that I work for, and I appreciate that. But anybody who can work with your company is great with us. We try to provide answers here, not necessarily commercials for us, but you've been very gracious to come on, explain the products and the benefit of working with your company. I really appreciate it, Aaron. Thanks for coming on the show.
I appreciate it so much, my friend. And if you have any other loans or whatever have you, just let you know we can go to a $3 million loan amount size on a jumbo product. I wanted to mention that too. So thank you so much, my friend. We'll talk more, and anytime I'm here, here to help out.
Thank you very much. That's Aaron Golden from A&D Mortgage. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. And we are on a number of different radio stations from Las Vegas down to Albuquerque, New Mexico, certainly in the middle in Southern California, and up in Lake Tahoe. These regions of the country are our first 4 or 5 or 6 or 7 affiliates, and they've done a great job at spreading the word about real estate and mortgages to our audience. We're also on YouTube, Jeff Barton, the Mortgage Voice, as well as the 8 major podcasts from Google Music Play to Apple to iHeartRadio to Spreaker to any number of others that you may have heard. Just look up Jeff Barton, the Mortgage Voice, and you can hear this as well as many other archive shows. And we talk basically about what's going on right now today in the market. For an up-to-minute kind of following, we're on LinkedIn as well as Facebook, Jeff Barton, the Mortgage Voice, or you can just Google me and find it. We try to give some updates as to what's going on. Rates are certainly at the core of what we do, but we like to keep in touch with the local markets that we are in. And with us today, once again, from Albuquerque is Richard Green from the New Mexico Real Estate Company. Richard, how are you?
I'm doing well. How are you doing? Thanks again for having me on.
Thank you very much for being gracious enough to accept the invitation. I really appreciate it. And I wanted to get a feel as to what's happening in your market. I read enough about it, and certainly about what's happening with COVID down there. But give us your idea of what's going on in the real estate and mortgage industries in your area right now.
Well, so of course, you know, rates are holding steady and holding extremely low. So that's driving lots and lots of refinances and lots of folks taking advantage of, be it a lot of them is a lot more just rate and term refis, just truly getting their payment down. Not as many folks cashing in on their equities or cash out, but just the ability to lower payments. So there's been a huge refi taking advantage of in our marketplace. On the purchase side, our market is an extreme seller's market today. As inventory in Albuquerque Metro, the Albuquerque MLS, and that I would even stretch down to the Los Lunas, Belen, East Mountains, Rio Rancho area is extremely low. I don't know if it's historically low, but it is low. So prices have been solid. The home prices, if anything, we've had a bump. We've had a decent bump in values, and homes typically that are in decent shape, priced right for the area, are going into multiple offer situations.
Right.
And so it's the housing is and the equity is really holding right now, even with COVID. And I think it's probably similar everywhere to where potentially the buyers, the pool of buyers has decreased, but seemingly the pool of available homes and real estate has decreased, kind of keeping it level. So there hasn't been a big sway or depression in regards to in values right now in the Albuquerque metro area.
Yeah, you mentioned a couple of things here that I want to touch on. You mentioned the scarcity of product. Is this quite typical at this time of the year, or as you said, you don't know?
Albuquerque. So Albuquerque, we've always been the tortoise and the hare. We've always just kind of moved along, and we don't really boom and we don't really bust. And so over the years of having colleagues in other Western states and hearing of these several years ago, of these colleagues having buyers writing 5, 6, 7, 8 offers and still can't buy a house, we've never experienced that. This is a phenomenon that I have not experienced in the Albuquerque market for the 20 years I've been in the mortgage business.
Okay, interesting. You also mentioned equity is at an all-time high, you were saying, in properties, but nobody's taking advantage of that, either with a reverse mortgage or some kind of HELOC?
No, and so that's not my core business. And so reverse mortgages, there is some that I have found, so the short answer is the HELOC is not really my core business, and the reverse, we do some reverse, but not enough to really speak to that. I'm sorry about that, Jeff. Yeah.
No problem. No problem. I hear you great now, and I appreciate you the update. Let me ask you a couple other questions, just about in general. What types of product are you seeing? Are you seeing more FHA? Are you seeing more 20% down? I know we have an unemployment issue in most of the country, but I don't see that as an issue as much in Albuquerque. Is that true?
We're fortunate. A lot of New Mexico's economy has always been government based, and even with some of the larger employers are Sandia National Laboratories, which is on Kirtland Kirtland Air Force Base, and which we also have an Air Force research lab in Albuquerque. Even the city of Albuquerque and Bernalillo County are fairly large employers in our area, and fortunately, those are open and running, and
Right.
we do a good bit of VA, and we do have a good bit of retirees, and so
Right.
there are a lot of people hurting, but a good segment of the population here in Albuquerque have not been affected, and so we've been extremely fortunate.
Yeah, I think that's true. In the research and the things that I read, it's not like a lot of other places, simply because it has, as you said, the employment situation is a lot of it government based or lab research based, and I think that that bodes well for the stability in a local economy, even though Albuquerque is a pretty big city.
Right. Our neighbors to the north, like the capital of New Mexico, is Santa Fe, which has a very large tourism economy. Right. I visited this weekend, and it's sad. It's a ghost town, and I'm sure they're extremely hurting because they have a very large dependence on tourism.
Right.
And we also, New Mexico has had a great presence for movie making, and I know a lot of folks who are not working in the movie industry.
Right.
And we'd have tons of folks coming from other spots to make movies. The one thing I do want to add, Jeff, is I just recently talking about why Albuquerque is still potentially doing okay in all this, talking to several real estate agents that are getting lots of referrals from out-of-state brokers sending referrals, because we are really getting a little bit of the cheaper economy. I don't need to work from home anymore.
Right.
I don't need to go into the office anymore. I can live in a cheaper economy. And just in casual conversation, he's showing 4 different out-of-state buyers homes in New Mexico because they no longer need to go into the office. They can just work from home. And it's just a lot cheaper here in comparison to other Western states.
That's great info. Richard, we're up against the clock. Could you shout out your phone number for people who want to get in touch with a terrific loan officer, real estate agent down there?
Thank you. It's 505-292-3200. 505-292-3200.
Richard, thank you very much for coming on the show once again. I hope to tap into your terrific resource and personality in the future. Thanks for coming on the show.
Thanks. You have a great day. Thank you. Talk to you soon. Bye.
Okay, bye-bye. That's Richard Green from New Mexico Real Estate Company. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for listening. Thanks very much for tuning in each and every week. We're on 8 different podcasts, all the major podcasts, and you can tune right in. Did it yesterday, and Google Music play, and it came right up. The Mortgage Voice, Jeff Barton, the Mortgage Voice. You can also see that particular Jeff Barton, the Mortgage Voice on YouTube. We shoot this for video, so you can see me, see the guests, and have segments of that show to be able to share with your friends. And if you go there, please sign up as somebody who wants to be a member. It always helps us get to you easily, or more easily, if in fact you do that. So if you do that, that'd be an awesome thing. We're also on 5 different radio stations, maybe 6 or 7 because it's AM, FM in some markets, from Albuquerque, New Mexico, all the way up to Las Vegas, Nevada, with Lake Tahoe in between, as well as our Inland Empire friends at KCAA and KMET. And I really appreciate the affiliations and what they do for us, which is to spread the word. The word is, you need to be educated about what's going on in the mortgage industry. It changes each and every week, each and every month, and sometimes each and every day. We watch the bond market, we watch what's happening with the Fed and what's happening over at Treasury. The reason being is that these are the times whereby these particular groups, these entities, they're the ones driving the mortgage rates. So if you see mortgage rates at historic rates, it's because the Treasury and the Fed are buying mortgage-backed securities, and they're buying treasuries. And that's really keeping everything the way it is and driving rates down. There is certainly demand for long-term debt, although trillions and trillions of dollars that have been spent currently in COVID, we're not quite sure how that will play out. The last time we did this, which was to a much lesser degree, HARP 1, HARP 2, was back in 2008, 2009. And, we really didn't see the inflation that we thought we would. We hope that that is a continued thing. The entire world is selling debt, so we're not the only ones here doing it. And COVID seems to be continually persistent and will be continually persistent until we get a virus. Until we get a virus, until we get a vaccine. That's really what we need, not a virus. We have a virus. Anyway, so given that being what it is, let's get to a couple other things that I wanted to in the news today. How to create fairness without the bureaucracy is one of the issues that we've been dealing with when we talk about, okay, there's a housing situation, and we may see an unbelievable housing issue if we start seeing people being kicked out of their homes. We know that the stimulus checks are coming, but we have been relying upon unemployment checks with an augmentation of $600 a week. Well, that's going away, and everybody knows that's going away. And I think the number is $200 a week. Well, that may not cover your rent, what you get in unemployment, and this $200 a week. So what happens to the millions of people who are at risk, 26 million people currently, may be at risk to being kicked out of their rentals? So how do we get from a situation where it's dire to a situation where we need the housing now? Now, in Los Angeles County, in Southern California, and in some of the major cities around the U.S., they have the second dwelling or the additional dwelling units, the ADUs, easily available. If you want to convert a casita at your house, if you want to change some of the makeup of what you have and build a casita, a house, there are now availabilities through changes in zoning, changes in the building and safety to be able to allow those things to be done. The problem is in some municipalities, and this is not uniform everywhere either, there are roadblocks to that, especially in communities whereby the population just doesn't want to see an influx of low-income people or renters. Let's say they're renters, right? We came last week and we talked a little bit about how in Long Island, the realtors were steering potential buyers to certain neighborhoods based on their ethnicity. Now, we know that's completely wrong. So how do we prevent that in cities which do not want to see an influx of renters, and therefore they don't allow that, and versus those cities and neighborhoods and towns that do allow that? It's an issue of legislation, and it's an issue of an individual town taking a stand by which to say, we can solve the problem. We can solve the problem. Government can't solve the problem, but our little town might be able to solve a small sliver of the problem, opening it up to a few people, opening it up to allow casitas, or in some space, in some cities, this ADU, what they call tiny homes. I'm a big proponent of tiny homes. I think if you can get into a tiny home for $30,000, then it's just about hookups and foundation and utilities. I think in a 5,000 square foot lot or even smaller, you can get one of these things. There's a home building company called Boxable out there, and really it's exactly what it sounds like. They show up, they put it down, they unfold it, they put the roof on, which is all based on this engineering, but it comes in a box, and basically it's put together very quickly, and it's a livable space, about 500 square feet. And certainly 2 people can live in a modern structure like that. I think it costs $30,000. Well, that's a heck of a lot different than spending billions and billions of dollars on government housing, which is usually subsidized housing. And that subsidy never goes away. And what happens to what they call Section 8 housing, which isn't really called that anymore, but that's what it is. It's government subsidized housing, either by the federal or the state governments. I think there is answers. I think there are answers to a lot of these problems locally. Not for everybody, not for every problem, but in the housing area, certainly there is land available, and there are people available who would be happy to invest in trying to get somebody a home. I saw, Daryl, you remember the story, Baileyville? Where was that? What story was that? It wasn't the Philadelphia story. It was.
No, it was the story with Jimmy
It was
Stewart.
Jimmy Stewart, right? I mean,
Yeah.
I'm aging myself, obviously.
The Christmas one
Wait,
comes up every
what was
year.
it? You remember what it was called?
No, but I will.
Yeah, I know. I'll get to it too. Anyway, Baileyville was this town where they put together, I don't know, 1,000 or square foot or less house, and they put a bunch of them in a row. Well, that's not the solution I want. I want to have infill deals in large areas across the U.S. to be able to help to solve this problem. It's easily done. It's very inexpensive in comparison to huge government complexes. And in terms of the neighborhood acceptance, that's the issue here, as it is in most of these fair housing and fair lending issues.
It's a Wonderful Life.
What's that?
It's
A Wonderful Life. Thank you very much. And by the way, I love that.
Jimmy Stewart.
It's one of those movies where you go, oh, that's so nice. And I know I'm dated, and my kids would tell me I've got all these problems because I like that kind of movie. And yes, I understand. What was liberal then is now just an old doddering guy. Yes, I agree. It's all true. Anyway,
1946.
What's that?
1946.
Oh, come on, 1946. I drift back often to times when my parents were, I guess, in their heyday. And this was back in the 50s. I was born in 55, of course. I actually remember President Eisenhower in 1959. I don't know why I remember him, but I remember him giving a speech. I remember the Nixon and the Kennedy debates.
Oh, sure.
I remember a lot of that time. And as I remember it, yes, it's painted a certain color. And the United States and where we live today is a completely different and better place. I'm so happy I live here today because I get to continually participate in trying to get people things that they deserve because they live here. Just like people in my group have deserved and get to enjoy, everybody should get to enjoy. And because it's an inevitable fact that that's just the way it's going to be, it's actually more relaxing to me. I think people that want things now are right. I don't know if it's going to happen, but in my small world, it has happened and it continues to happen. And I really appreciate people who plug into the fact that this is about lending money, about buying real estate, and anybody can do that. And if people tell you can't do that, just give me a call. We'll set them straight or help you get what you want to get. I've been involved in several situations and cases over the last 3 or 4 years. It's been difficult in a couple of reasons, for a couple of reasons. One is that you're fighting things that just are outdated and stupid, but it's like you can't fight City Hall, the old phrase, you can't fight City Hall. So you find workarounds, you work with people in order to be able to get them what they want, and that's the key to what we have here at the show, The Mortgage Voice. And thank you very much for listening. I'm Jeff Barton, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.